no more than 18 hours before the Fed it's going to release its interest rate decision, and in this video I'm going to deep dive walking through the best potential trade ideas and what will happen when the Fed is going to release the interest rate decision. Guys, before we go to the chart, as usual, I'm Alex, your technical analyst from FundYourFX, and let's go straight to the chart. Okay guys, by the way, I'm very excited for this one because this is going to be big. This is probably, the first time the Fed is going to cut interest rate for years from now. And we see here on investing.com for the economic calendar, it says that the cut will be likely to 25 basis points here. And then we also see there will probably this year it's going to cut, well, not this year, but in this meeting, there highly chance that the Fed is going to cut 50 basis point. 50 basis point in single meeting, but well, I don't think so, because we see right here the CPI on month last September, 11 September 2025, we see that there's an increase of 0.1%. Well, they're likely that probably the Fed is not going to increase the cutting basis point. It's going to stick with 25 basis point. And for PPI, this is quite weird because the PPI, it's mixed. PPI decreased 0.1%, but the CPI increased 0.1%. The mixed data we see right here is going to make the Fed play its game, which is wait and see in the next meeting, September meeting. This meeting, the FOMC, because we have FOMC press conference and FOMC statement, it will be likely for the Fed to be wait and see, stick with 25 basis point. And well, if the market is still on the strong side, the job market is still strong, and then the inflation is still strong, the Fed sees that there's none of slowing down on the job market and in the inflation, well, 25 basis point for this year, in this year is enough. But if the data goes south, where the job employment or the job market is going down, and then the inflation is also going down, so if the Fed is not going to cut rates again, it can come to the stagflation. Okay, and well, okay, after this we have already talked about the macroeconomics, so the projection will likely sticks with 25 basis point for today. And then let's see what is the best pair for us to trade. Okay, first one, let's check out the DXY or the dollar index. The dollar index, we see right here, the price already break its base structure or consolidation structure here. In the weekly market recap or the weekly market forecast, I have stated that the DXY will likely to continue its bearish momentum, its bearish structure, its bearish movement to prior support, which is right here. And right now the price near its prior support, and if the support already break or already retrace validately, so the next potential target for the DXY is to the next target, which is 94.055. This is measured by the Fibonacci external retracement tool. So we use Fibonacci because we see right here, right around there, there is no more support that we can take. Okay, so 94.055, it's the next target if the support here is already validated by the breakout. And then let's check out, well, maybe gold. Okay, let's check out gold. What will happen to gold? Okay, we see right here the gold, it's very volatile in the upside momentum, and we see that our plan for the gold to retrace to demand area is quite failed. because we see right here first, we see here there is a show or rejection, and there is a valid swing high, and then there will likely to probably that price will likely to retrace to demand area, but we are wrong in here, and the price it's continue its bullish momentum, and well, gold has moved in very critical overbought area. Okay, the gold, technically the gold is overpriced. You see here there is so much demand around here, but the gold it's not wanting to pick up the demand here. What will happen next? This is quite scary, because often the time we see the price action like this before the potential news data, very big news data like non-farm payroll or like the interest rate decision by the Fed or FOMC. We see that the gold like makes the last squeeze, so there will likely for gold to retrace to demand area, or for when the data is released, the gold will likely to jump up and then correct in the very volatile movement. So for gold right now, if you really want to trade gold, I advise you that you can keep gold for now, but we have we have 18 more hours before the FOMC data release. And we see here, okay, on forward chart, we are going to forward chart, and we are seeing on forward chart, we see that the price will likely to retrace within the 18-hour gap before the FOMC. So we see right here, this is a demand, we see demand here, and then we see demand, okay, this is also demand, and there will likely the price, well, eventually the price will likely to make a retracement or correction or pullback to its nearest demand zone. Okay, that's the plan for gold. I'm not going to trade gold today, and in fact I'm not going to trade anything today because I have already profited more than $160 in $10,000 account. So it was 10%? Yep. No, not 10%. Yep. Yeah, 1%. Okay, so that's good. That's great for us. That's great for me. 161% profit from $10,000. It's quite very good. It's very good. Not 10%, guys. Sorry, my mind is just blown away by this pretty much very chaotic FOMC data meeting that we are going to get in the 18 hours. So sorry, guys. So 1%. It's quite great. It's quite good. So well, I think I'm not going to trade anything because let's check EURUSD. Let me see. So I have profited from EURUSD. See, EURUSD it's going to continue making a pullback to prior or to the last demand, which is right here. We see there is plenty of demand right here. The price makes a base formation and then shoot up. And for EURUSD, but it's quite weird, guys, by the way. For the forward chart, 18 more hours before the FOMC data release, the price already show a pullback. What will happen? There is two cases. Before the market is going to, well, before the FOMC data is going to get released, there is high likelihood that the market will likely to pull back and come near this demand zone after the FOMC or interest rate data is going to be released. Then the market will lick or will touch the demand zone and then shoot up back to the bullish trend. So that's the case for now, but let's see on the UK market open. Let's see if the price continue its pullback or its retracement. But if we are seeing, well, we are not seeing any of pullbacks when the UK market open, there will likely that the price will likely to make a pullback when the FOMC market data release. It's going to be released in 18 more hours. Okay, let's go check, well, Bitcoin. Let's check out Bitcoin. Okay, let's check out Bitcoin, EURUSD, gold, and Bitcoin should be good. Okay, Bitcoin, let's check out on the daily chart. Well, it's good. The Bitcoin is surged prior to FOMC data release. And we see right here, it's show rejection or show potential rejection on the daily chart. On the forward chart, we see, yep, this is doji candle. Doji candle show as potential pullback or potential slowing down or potential rejection. Okay, and right now on the forward chart, it's the rejection itself have really validated by this candle. The candle here, it's still running. So the main plan for the Bitcoin is when the market data is going to be released, the FOMC data and the interest rate decision data is going to be released, the Bitcoin will start moving on the downward momentum. That's the logic for me. But if you have another opinion, well, it's okay, because every traders have different eyes, different point of view. So it's no right or wrong, okay? But for the Bitcoin, it's going to likely to continue its bearish correction movement, okay? And let's see what should we do next. Let's check out the pound dollar. Okay, let's check out pound dollar. Okay, pound dollar still move in the massive sideways momentum. Let's see on the forward chart. The forward chart, the price already break its prior. So this one is the lower peak, okay, and well, the price on the forward chart have already moved in the bullish momentum. So same case like on the EURUSD or Euro dollar, the price will likely to come to the demand zone, which is right here and right here and right here. This very big one, very big demand zone, and this is the change of characters. Wait, let me check. This is the change of character, and then the pullback right here. It can be good to go if you want to take a long position on gold. You know what? I will likely to put the pound dollar to my watch list for today. So I will keep an eye for this, and then we are going to look for the entry potential for the pound dollar. So the pound dollar for now, strategy for now is to wait for the pullback near the demand zone, rejecting on the demand zone, and then we are going to see for the trend alignment. So if there is a trend alignment already on the pound dollar, so we can enter on the 30 minutes time frame, as the trend alignment has happened on 30 minutes time frame. So guys, that's pretty mouthful, that's pretty simple, and of course mouthful. But I hope you have amazing trade this day, because we have FOMC data release, we have interest rate decision release. I hope you be safe. Okay guys, be safe. Please make sure the risk to reward ratio is good. Make sure your money management is well enough to conquer this, well, very volatile data release. So guys, well, I hope you enjoyed today's video. Don't forget to share this video, like and comment in this video, and don't forget to subscribe to our YouTube channel. Don't forget also to follow our TikTok, X, and Instagram, so you can get notified if I made this kind of video. Guys, thank you so much for watching, and I'll see you again in the next video. Bye bye.